Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out guys, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay guys, let's jump right down into this one. We'll try to keep this one brief, but we'll keep it to the point of everything that is going on from a technical analysis point of view. So here we have Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. You can see that we completed this fifth wave high. This was 25,250. It was right within the parameters of what we were previously talking about of 25,075 and 25,353. So almost slap bang in the middle of there. We could then see that we had a pretty significant drop to the downside. Took us down to a low of 23,339. And then we've rallied back up again, trying to pierce up that higher area. Okay, my expectations are that we have to still move down, and we kind of have already completed a local top. Okay, so we can see here that this additional high just here at 25,192 fails to breach the high of 25,250. Now, from an Elliott wave theory point of view, we're going to have completed wave 1 down here, wave 2 or B wave up here, and we've got to have a C wave to come down here. Now, because this is reasonably high to the 25,250, I think we actually wicked up to a high of $25,192 to the penny, just in the same way that it was $25,250 to the penny, because Binance loves everything to the penny a lot. Anyway, moving on, we can kind of see that this essentially is going to be a big sideways trade, where we're looking to pierce down just a fraction lower than the low that we're already on, which was 23,339. Okay, so we're looking to come down just a fraction further. Now, if I go ahead and actually measure the distances on this, we can actually get a pretty good bead on where we think things are likely to go. It's going to be between 23,289 and 22,861. It's going to be a little bit of a range. It's going to be between the 1 and the 1.236. So I'm going to drop that right into there. Okay, so that's going to be where we think that C wave is likely to go. Now, it's possible that this C wave also contains a 5-wave structure, and this is a 1, 2, 3, 4, and 5, and we drop down lower. Okay, it's always going to be a variable that we have to consider. Likewise, the structure here to this move already is pretty impressive. So we want to be aware that it could be that actually this is a wave 1, this is a wave 2, which is pretty typical of a wave 2 to retrace close to the 100% level, and then we drop down in a 1.618 move. And if we were to do that, then we'll be talking about significantly lower on here. Okay, and I'll talk about the bearish kind of scenarios this afternoon when I do another video on Bitcoin, talk about why we're kind of bearish on BTC at the moment and the crypto space and all that kind of stuff. So do watch out for that. But here at the moment, I'll just kind of talk about this. It's the 1.618 would basically be a bit of a warning level, as long as we have the correct structure, of course, which will be 22,182. And then, of course, it's fair play to think about where that could potentially take us. Now, that's kind of the bearish scenarios. Now, for the bullish scenarios is that we complete this as an ABC structure and we sit within this range of 22,857 and 23,289. And if we do, then actually the bullish structure is that we're in an ABC structure upwards, and this is just a corrective move. A, B, and then we go up into C. Okay, now if I do this, and I measure this distance as we would normally with anything else, and we'll take it to the lower side because it gives us a weaker forecast, and we can then just revel in the fact that it's higher, for example. We would have the same 1 to 1.236 on the upper side, which would then put us more between $27,038 and $28,130, which would be a pretty interesting level. And I'll mark that with this yellow box area just up here. Okay, so we can then see that we have to come down in order to go up under this ABC zigzag structure. Now, if I throw HTF liquidity in here, we can say, okay, well, there's a lot of liquidity to the downside here, and so that could be a cascading effect that does actually bring us down into those lows. And on the higher side, there's a little bit, there's a few gaps in places though, so we want to be a little bit concerned with that. And our order blocks are a little bit on the lower side, right? Our order blocks or sell order blocks are just up here at about 25, and down here on the lower side they're around 21. So we can know that we're just kind of bouncing around these levels. And there's the orders down at the bottom here haven't been filled, whereas we've kind of hit a couple of these sell order blocks, and they kind of, you can see them on this chart here where we can kind of see them in there. Now, if I take this up to, I think, the daily chart and throw in those order blocks, you can really kind of see it's right up there. On that one, you can see the next one sits up a little bit higher, and selling, was down here, has been lowered, right? So, buying was over this side around the kind of 15. This has now come down to the 13, 14K area over the last few days. But this is not 100% accurate. It just gives us an idea as to kind of where things are. In terms of liquidity and stop losses, there's a lot more to the downside than to the upside. So a lot of people going long. And well, that means there's a lot of liquidity down there. So we should be aware that, from a liquidity hunting point of view, the price loves to go ahead and grab it. It's a manipulated market, liquidity hunting and all of that kind of stuff, and smart money concepts, which will come on over into this one, which is our smart money concepts. And we can see what's been going on here, okay, from our recent sideways trade, because essentially that's kind of what's going on here. We kind of have our upper area, and we kind of have a lower area. Right now, we spent a fair amount of time up in that higher range, okay, near the premium, and we haven't really spent too much time near the discounted range, okay? Now, the other things that's worth noting here is that we have a weak high. Okay, let me just move that out of the way. It's a weak high, and we have a strong low. Okay, so that means that we have higher possibilities of pushing to the upside. However, we should also consider a couple of the other variables, which are that we are overbought on the 1 hour chart, overbought on the daily chart, overbought on the weekly chart. Progressing upwards on the 4 hour, almost overbought, and on the 8 hour, we're progressing up there, heading back to the overbought range. Okay, so we don't want to get ourselves too caught up thinking it's a weak high, we're going to go to the moon, because what I see going on here is that we've kind of tested this range once, we tested it again, we're kind of getting closer, but we're getting ourselves set up here. We're getting rejected all up in this higher range. So actually, we're probably going to have to move down. We also can see that we have the fair value gap just here. This is the imbalance in the order books. Essentially, there's been a high amount of buying pressure right in here, but no one really selling. So the price soared all the way through. It did come back down and kind of tried to fill this area, but it hasn't completely filled this blank space just yet. So my expectations are aligned to the stochastic and the momentum indicator that we are likely to move on down. Now, the move to the downside, as I said, I kind of give you the targets from an Elliott wave theory point of view, and there's key areas that we're probably going to resonate well with. The equilibrium, which is essentially the 50% level between the discount and the premium range. And then, of course, down here, we can see this little green block. This here is where the buyers are. This is like a demand zone, if you will. So this is a pretty positive area to kind of be thinking about. Now, on the micro level, we can see that there's a change of character here and a break of structure here. Okay, that was fantastic. But after that, we actually did print a change of character here. We haven't broken the structure, but if we were to come down, I think lower than this one, it's going to break that structure, and then we're going to get confirmation of that micro move to the downside. Either way, we haven't really got another change of character yet, so we can't feel bullish here without a change of character to at least symbolize the fact that we are moving in the upward direction. So right now, that change of character tells us everything that we need to know. This is a natural retracement that loves to happen. So you get a change of character like this, price loves to come back up towards the previous areas of resistance and imbalances and all that kind of stuff, and then comes back down in its directional move. Now, as we kind of move down here, we can see that there are some other imbalances that have not yet been filled on this hourly chart. So we have 23K. We also have down here at 22.5K. And so my expectation is that we have to kind of chew through those at some point. And yeah, so we'll kind of bring this up into our AA 4-hour chart here. Okay, and we can also see that that major imbalance is really coming in here at 22.9 through to about 23.3 approximately, and then of course we have all those ones that were on the way up, right, all the way down at $17,000, which, at some point I think we'll have to kind of go back and fill. Now, because we're overbought quite heavily here on our weekly and daily charts, now the expectation is that we move to the downside, but we cannot ignore that we have this break of structure right in here. Okay, now at some point you do get reversals. So we're going to have to see whether or not a move to the downside breaks this, or we'll have a change of character, I should say, to the downside. Now, the other thing to bear in mind on the 4-hour chart, unlike what we have got going on the hourly, is that this is now symbolized as, well, it's actually symbolized as a weak high as well. So again, you can see all the testing going on here, but I think that this is about to get rejected personally. Even though it says a weak high, it means that we might just pierce up slightly higher than 25,250 from a smart money concepts, but not from an Elliott wave theory point of view. On the downside here, we have the strong low. Okay, so this is giving us an indication that this is going to be a difficult area to kind of beat, which is fine. We can expect to see that. And obviously our equilibrium is right down here in consolidation phase as well. So interesting to kind of keep a close eye on how those things kind of come together. From an 8-hour standpoint, we also have the weak high, we have the equilibrium right down on consolidation, and we have the strong low down here. And again, this is a little bit higher than the actual low that we've seen at the moment. We had the change of character down at the bottom here. We haven't had any major break of structures though, so it'd be interesting to kind of see how that kind of plays out. Now, from our daily standpoint, I'll probably talk about this a little bit more later. Again, we have the weak low and we have the strong high. Okay, so on our daily chart, we have a strong high point here where essentially it doesn't look like we're going to breach that. It looks like, if anything, we've got to come down to a weak low. Okay, the weak low means essentially that we might, on the daily chart and a daily point of view, not actually be able to keep that low at $15,000 that we've currently got. So it'd be interesting to kind of see how that plays out. We obviously have these imbalances on our daily chart that do look different to that of the previous smaller time frames. So really you're talking about 19k being the key level for Bitcoin on that kind of point of view. So overall, everything's quite interesting. I do think that we're kind of getting to a point where we are reaching a peak. We can see that this is WXYXZ. It's not 1, 2, 3, 4, 5, which basically means that we're not, from an Elliott wave theory point of view, trading or trending to the upside. It just basically looks like we're coming to completion. This also happens to be a WXYXZ to the bottom here. However, it is possible that we're yet to really see this kind of come down in another kind of move. For example, this could be our X wave and we're yet to have that Z wave. Okay, and it's possible that we have to look at it like this. There's so many different ways of kind of taking a look at this at the moment. I'm trying to kind of be optimistic where possible, but it doesn't look overly great at this point in time. One of the things we have to consider is across the kind of different time frames is essentially we've seen time and time again that when Bitcoin bottoms, many of the altcoins have not. If we expect a 50% retracement on the current price for Bitcoin, maybe no new all-time high and all of that, but you might actually see many of those altcoins go down into new lower lows and all that kind of stuff. So there's got to bear in mind, if we take a look at the history of altcoins versus Bitcoin, Bitcoin bottoms, but many altcoins do not. Some do, such as Chainlink, Ethereum, etc., but you don't tend to find things like XRP, XLM, ADA, for example. They all bottomed after Bitcoin had bottomed. So just kind of bear that in mind. March 2020 black swan events can cripple the markets, and for the most part, it looked like it needed to go down at the time as well. It just needed a nudge in a general direction. No one could have predicted the extreme extent of which March 2020's correction was going to bring, but nonetheless, a correction was due. So yeah, I'm going to leave this video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then subscribe, tap the bell, select all the notifications, and stay up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.